Hey Benjamin, this is Ryan with TrendLizard.com. I hope you are doing well. I got your email and I'm going to analyze OCLR, Oclaro, trading on the NASDAQ for you. I looked at this stock a bunch of different ways. It took me a long time to really figure out what was going on or what I thought was going on because there are a lot of different ways to look at it and a lot of things that are going on. So excuse the long analysis, but we're going to take our time and look at it from every angle that it offers us. So this is the first one. This shows OCLR since its inception in 2000. What I did here was change the scale from a log scale to a linear scale, and the only difference there is every box is 250 points. And the reason I did that is I just wanted to show the extent of its advance early in its life and the absolute destruction that happened right away after that. And on a large enough scale, you see it looks like it's basically flatlined for the past 15 years. So keep this in mind. I highly doubt it's ever a high flyer like it was back then, back in the heyday, bull market and all that fun stuff. But hey, this is not normally how we look at a stock, and there's certainly more information we can garner when we go back to the normal log scale. And this is it. This is a look at its from its inception, everything that's happened on OCLR. Now, it's obviously been in a massive downtrend. It set its all-time low, at least to this point, in 2013. This isn't exactly the cleanest trendy move, but clearly there are trendy moves within it, and I'm comfortable calling a move that went from 42.50 down to about a buck one big trendy move that may have ended here. It's impossible to say, but I think we can be okay just calling this the end of a move, or at least the end of some kind of trendy action. And the real question is, what's going on off the 2013 low? Is this the start of a new uptrend? Is this just another bump that's going to fade like this one did here off the 2009 low? That's the purpose. So all we really care about is what's going on off the 2013 low. So let's go ahead and zoom in on that move. It shows some potential. The move off the 2013 low certainly has accelerated over the last couple years. It started off in a pretty funky way. This isn't super convincing, but so be it. Everything that's happened basically since early 2015 shows trendy potential. It certainly does not look like it's over. I would expect this move to continue overall, but there's a caveat there. I don't think it's going to continue higher right away, and I'll show you why. But that has a very specific implication in that if a larger pullback does form, as it appears to be the case, it could move all the way down into this yellow area here. So I don't know if you're really in the mood to hang on for a move that goes all the way down to 5 or 7 or somewhere in that area. So downside potential is a little bit larger than I'm sure you want, but let's go ahead and zoom in and take a look at things. This looks at the last year and a half of price action. It just shows what's going on a little bit closer. The internals look good. They look bullish. They look trendy. They look like they're going to continue higher. But again, recent action's been pretty choppy, and it looks like a move that's not quite over yet. So if we zoom in even more and look at that choppy action, I think you can see a little bit more what I'm talking about. Since November, it's just gone up, down, up, down, up, down. It doesn't look like a move that's over. It certainly looks like a counter trend move before higher prices. It just doesn't look like it's there yet. A move below 890, which granted is kind of far away, would confirm that the pullback is still in place, and it can open up the door to a much larger down move, as I showed you on this previous chart. So this is what I think is happening. So if you don't own it right now, I personally wouldn't buy it. I would wait for a larger counter trend pullback to form, wait for an indication that the uptrend has resumed, and gone from there. So after all that, there's still one last way that I want to look at this stock, and it's just to show you why I think that this is still a counter trend move that's not over, as opposed to the resumption of the uptrend already. So let's play the devil's advocate and look at this guy as if it resumed its uptrend, and this is what that would look like. There's not a lot supporting this labeling here, and I'll show you exactly why. If the uptrend resumed, it resumed off October's low here. The initial up leg isn't super trendy. It would have to be called a leading diagonal, which is an uncommon move right off the bat. The pullback that followed the unlikely leading diagonal retraced more than 61.8% of the leading diagonal. Strike number 2, which says, really, this isn't forming up as any great trendy move. The third strike comes when you look at this next up leg off the January low. This move here doesn't look trendy standalone. It's just it looks like a three-wave move. It doesn't look like the resumption of the uptrend. So all in all, there's just not a lot that tells us that we should be bullish on this guy right away, which makes me think again that it's a counter trend pullback that's not yet over. So Hopefully that's not too in-depth, but I wanted to give you every angle and why I don't think you should own it yet, but I think you should keep an eye on it and certainly be ready for what could be a very strong move moving forward after this pullback completes. So if this is something you want to revisit down the line after a larger pullback forms, I'd certainly be more than happy to do that. So hopefully this was helpful, Benjamin. Have a wonderful evening, and I will talk to you again very soon.